Hey, morning everyone. Let's pull this down a little. Hope you're all doing well. It is November 15th here. Is it Wednesday? Wow, Wednesday. So we're midweek today, starting today, I should say. We're in the middle of the week, and yesterday we had inflation data that came out. Today we had some more inflation data. We had CPI yesterday, PPI this morning, and it seems like inflation is cooling yet again after a little pop in the summer. Now, as we know, inflation is fairly cyclical, so these could be just like peaks and troughs. And the Fed has reiterated that it's not necessarily super overjoyed with getting the inflation figure right back on track to their 2% target just yet, right? There's still a lot of work to do apparently, and this has been going on for quite some time. So we can see that yesterday's massive rally from the CPI trickled into the day session as well, right? A lot of investors and traders rejoiced on this bull, right? The bull is back, everything is good to go, which had a clear shock to the consensus with that CPI report as the rate of inflation fell more than expected in October. Stocks popped, yields dropped, right? Bonds rocked higher after the headline inflation flatlined month on month, an impressive feat that has so far excluded the start of a recession. So core inflation numbers were also striking, with the figure climbing by lower than expected 4% year over year to mark the slowest reading since September 2021. So some investing group leaders, right? Lawrence Fuller, author of the Portfolio Architect, has said, "I have been preaching for the past year that the rate of inflation would fall as fast as it rose." And this report supports that assertion, right? As I've been talking about here on YouTube for quite some time, right? October was the time to look to buy the dips because we still have a little more upside to go. A lot of people are looking at this rally thinking, "Oh my God, it's on a weak volume. It's on a weak base, right? How long can this rally go?" Well, the more people think that way, right, the higher it is going to go. I do expect a December pullback as the Santa Claus rally, in my opinion, came a little sooner than expected, right? So today's report ends the discussion, or yesterday's report, I should say, CPI, the discussion of rate hikes, and should also end the discussion about rates staying higher for longer, right? This is what same investing group leader author said. It looks like the little guy was one step ahead of Wall Street this time around, and the professional money management community has been extraordinarily bearish as of late, right? Mike Wilson from Morgan Stanley, at the bottom of this rally, right towards the drop, before we rallied the 8% on the market, he said that there's not going to be a Santa Claus rally. A few months or a few weeks prior to that, he said there's another 25% going to the downside. This is someone that's earning a multi-million-dollar compensation on a regular or on a yearly basis as CIO of Morgan Stanley, right? So as you can see, right, some people are fairly overpaid to overlook the facts of the market as it stands. So am I necessarily bearish on this whole rally? Not really, right? I think that pullbacks are going to be higher lows to be bought into for the coming quarter or two. So the professional money, yeah, that couldn't be seen any clearer than in the latest 13F filing from Michael Burry, right? Big short investor. While the quarterly filings don't signal exactly when he exited his Q2 stake or outline precisely what hedge funds are up to, but Michael Burry's Scion Asset Management said to have it's no longer holding the 2 million puts on the SPY ETF and the 2 million puts on the triple Qs, which totaled about $1.6 billion of notional value. So the bearish bets follow many forecasts by Burry in recent years that predicted the mother of all crashes and rhetoric that referred to the current market environment as the greatest speculative bubble of all time by 2 orders of magnitude. And as I said about 2008, it's like watching a plane crash, so Michael Burry said. But so far, not necessarily right. Can he be right in 2024, 2025? Probably. But is it going to be a cataclysmic massive dump? We'll see. Like a lot of people on social media have been talking about, Michael Burry's been right about the past 10 out of 4 crashes in the market, right? So take that with a grain of salt, what he says. The market celebration saw that the Nasdaq exits correction territory on Tuesday with the Magnificent Seven adding more than $200 billion to their market caps. But it wasn't just the elite group of tech stocks. Small caps also, which have lagged tremendously behind their large cap peers in 2023, rose and tried to play catch up throughout the session, with the Russell 2000 IWM closing up about 5.5%. So this lifted indexes into positive territory for the year following the enthusiasm, right? We've seen that Powell has kept a hawkish bend of fear that what is happening today continues, and the melt up in stocks and collapse in market rates can be inflationary. So with that, right, PPI comes out today again, lower than expected, putting some upside pressure initially in the market as we pulled back. Now we'll talk about the plan for the day, obviously on the S&P 500 futures, but we're still in bullish territory. We're still in bullish territory, but generally speaking, I think we are due for some kind of sideways rotation, at least some ping-pong action over the next few days, few weeks before we can continue more so of this rally, right? These buyers are looking a little exhausted. So I'm not saying this thing flips around, turns around, drops another 200 points, but you got to be cautious of constantly buying every single day. Now, U.S. House lawmakers have passed a temporary spending bill in a win for the newly elected Speaker Mike Johnson. So the bill will now go to the Senate for a vote where it is widely expected to pass. Senate Majority Leader Chuck Schumer loaded the measure that excludes hard-right partisan cuts and poison pills with a strong bipartisan vote, while hardline Republican Representative Mike Garcia said it wasn't ideal. But a shutdown is a far worse world to be in. So the two-part stopgap bill would fund some government operations through January 19th, 2024, through the rest of February into 2nd, right? February 2nd, meaning that there could be another shutdown deadline on Groundhog Day at the beginning of February. As we talk about the China and U.S. relations, right? All eyes are on California, where President Biden and Chinese counterpart Xi Jinping will meet on the sidelines of the APEC summit today to help cool escalation tensions between countries. And it would be naive to expect this meeting to result in a breakthrough development, but I'm optimistic that this meeting will steer the two countries in the right direction to manage geopolitical risks better. Said some investors and analysts, catering to the multinationals that might boost the Chinese economy. So Xi will also meet with the group of high-profile CEOs to shore up investor confidence. Meetings are expected with Tesla's Elon Musk, Microsoft's Nadella, ExxonMobil's Woods, Citigroup's Fraser, among other executives. So it's going to be an interesting get-together. Now, let's take a look at what we got in the S&P 500 futures market here, because I think that we're shaping up for some more interesting market movement throughout the following weeks, right? Like I was expecting this pop. I could expect a pullback kind of sideways movement over the next few days, few weeks, before we get maybe a mid-December pullback and then rally back into the end of the year and Q1 2023. So as we see here on my charts, we got a bunch of blue cool boxes here that are holding pretty well. But generally speaking, right, if I look at the volume profile, one of the main things I'm going to be watching on the S&P 500 futures is 45.25 area, plus or minus a few handles, for the first portion of resistance where the sellers are going to try to pull down into the 10s and into the 4500s. You lose the 4500, 4490s, like high 90s, you get a lot of stops that are going to get run from the buyers to the downside, which could open up a larger drop, 20, 30, 40 points, to clean up a lot of the auction to the downside. So it's pivotal that the buyers hold 4500, 45.10 is another region that they do want to hold. Into the mid-30s is also another resistance, then up into the 60-65 area if we do get there. I know a lot of shorts are starting to get opened up between these 40s and 60s to the upside, so it's one thing that you do have to watch on the S&P 500 futures. What we're going to do is open up our live trading room right today for futures in just a few minutes. But remember, check out community.tradeproacademy.com. Also, keep in mind that check your emails for some updates and some Black Friday, Cyber Monday stuff that's coming out at some point today or this week. So keep your eyes peeled on that. Check out community.tradeproacademy.com for our free Discord. And I hope everyone has a happy hump day midweek, right? Wednesday. Let's see what the market presents. Don't just blindly just buy everything that you see because you've seen continuous rallies. Keep in mind what distribution is telling you. So, the bull market beard. Thanks, Mark. Yeah, I guess I'm not gonna cut it until we actually get a large correction. How about that? We'll see what happens. Maybe I'll be wearing this beard for the next 6 months. Who knows? Thanks, guys. Take care. Happy Wednesday. I'll see you guys in the trading room. And